Welcome back to the channel, and welcome back to another backtesting video. So it's been a minute since I did one. Let's just get this to ES. So, sort of recapping just really quickly where we were. So we had the two-part episode, I believe, on the last in the last session, where we're looking for these longs, and unfortunately the market did not come back into tag the bullish order block in order for us to see higher prices, and the market ultimately delivered to where we were. So we were trying to capture the longs, even though we caught a little bit of the shorts. We're trying to capture the longs. So yeah, so unfortunately we were unable to get anything from that, which is a shame. But you know, that is trading. So this was Wednesday. So I think it's right now for us to forward on to Thursday. So let's just drop out to the hourly, and then we'll sort of crack on with our analysis and so on, and then we'll get into it. So not going to dwell in terms of click through. We're just going to go to the next session and see what delivered. Okay, so the market ultimately came back in and then rejected. Excuse me. Okay, so the market ultimately rejected and came back in. So a bit of a consolidation day, but nonetheless would have presented the opportunity, would have delivered to our, had we got into that trade. So, so we're going to go to the next session, and then one more. Okay, so just want to clean the charts up a little bit. Get ourselves situated. Okay, that, get rid of that, get rid of that. Okay. Okay. And then we're going to venture out to the daily, get an idea of what we have here. Remember again, backtesting used to perfect my approach to the markets. This is ultimately what I'm going to take into the live trading setting. So backtesting is super important. You should try and factor it in, if you can, daily, in your daily routine before the market, if you can. But certainly try and get a session in afterwards, just to prepare and freshen your minds. Okay, so we've obviously got that larger long-term SMT there. Okay, so has anything changed on the daily time frame? I don't believe it has. Obviously, we had a reaccumulation of shorts here from the civvies, as we can see, and then we obviously had the SMT at the lows. So we're going to drop to the H4 because nothing has really changed. Might need to clean this one up a little bit, but let's get the let's get our highlighter out and then start the analysis. But we always can take that out as well. Actually, I'm not going to take that out. We can always start with, well, we'll get the highlighter. So we're looking at Wednesday. So okay, so that there. That's the previous day's low. It's not the lowest candle of the day, so this becomes aligned H4. Okay, that become there. Fine. And we'll just go back to the highlighter. I want to see. So that there. There. And that will be there. So there, and another one here. Okay. Right, so all of them have purged. We've had a close above this SIBI, so we can get rid of that. And that is true market structure shift here. Okay. Just want to make sure, is there anything else that's warranted? Don't believe so. Okay, so we can get into the analysis now. 29th. Okay. So right, so IOF. So I'm going to jump out to the weekly and then we'll assess the daily as well. So obviously the high time frame objective was hit on NQ. And this could be just a short-term bounce potentially. We don't know yet. It's obviously traded up into the bearish order block, so could well be a catalyst for lower prices. But institutional order flow remains bearish. Just because we've seen this hasn't invalidated anything, so we can maintain our bearish posture. So relative to the weekly and daily time frame, IOF remains bearish following the high time frame displacement, which was initiated by the high time frame crack and correlation, and then further reaccumulation at the SIBI is essentially what we're saying here. Okay, so there we go. Got that to there. Okay. So there we are. So that can remain. And then obviously we noted as well, furthermore, I'd noted the likely breakaway gap, which indicates strength to the downside. So this breakaway gap here, we're looking at a 3 candle constellation. So 1, 2, 3. We wanted to see if some form of H4 SIBI resided within there, which we can see did, and that was a catalyst for lower prices. So we can also take that statement, but we want to just polish it up. Furthermore, noted the breakaway gap, which indicates strength to the downside. This was confirmed by the H4 SIBI forming inside of the third daily candle, and the market finding support lower in the form of an high time frame cracking correlation. Okay. And then finally, we want to make a reference to the old highs and lows, and we can see that the old lows are being manipulated and are being displaced through, and the old highs are being manipulated. Okay, bit of coffee. Bear with me. Okay, so we want to go to ERL, IRL. Okay, so looking at ERL to IRL, obviously we can see on ES traded up into the SIBI. Want to trade it lower. We wanted to see a purge of this low, not quite, but we've left relative equal lows. Now, you know, make what you will about relative equal lows. I'm looking at the weekly purge here. Is it a deep purge? No. Does it indicate that we could potentially trade lower into there? Yes, you know, possibly. Engineering liquidity below here, absolutely. But I would want to see the market take out some key liquidity. Okay. So in terms of ERL, IRL, just going to venture back out to the weekly. Let's try and use the weekly. My preference would be to still see the market want to attack the external range liquidity at the lows. Just that's what I would see from a longer term standpoint. However, it's actually quite difficult to really determine because NQ is probably the most clear. You know, and then we've got obviously the SMT at the lows. So this could support a move to the BPR. So right now I would say that we're likely to go towards the BPR. So let's utilize NQ. So on NQ, following the purge of the old low weekly, coupled with SMT on a lower high time frame, lower high time frame. This could now see the market target imbalances above the current price. But likely in heading into next week. So just looking at NQ, and I just want to drop to the daily. It's a real tough one because I could see the market trade up to this sort of area, including the BPR, and then trade low. But then you've got this level here, which is clean. So I think, depending on where we get the next real high time frame cracking correlation, we've obviously seen one at the lows, but if we see another key one where potentially YM could run its low, but with IOF to the downside, any move higher should be seen as a short-term move. So this is a real tough one. So I would say ultimately with IOF to the downside, we could see the lows purged and the liquidity engaged. So I do think the market's going to come here. I mean, look how close we are on ES. Certainly appears to me that the market wants to come back down here. So we may get a short-term move up into this area here, but ultimately, I think even if you took this range to give you kind of an idea of where the market could go to, see, it kind of points to this area again. So that's what I'd probably be looking at, is a run into here. Right, just bear me a second. I'm just going to grab a jacket. It's a bit cold in here. And we're back. So let's go to SPs. I'm going to drop down to the H4, the usual routine. Let's just enlarge this a bit. Excuse me. Okay, so I have noted the clean and clear swing points. Above and below the current price, referencing the previous day's high and the previous day's low. Important to note that the previous day's high has formed below the true week open, therefore this would make shorts low probability. This will make shorts low probability. Okay. Okay, so they've all purged that. So TO. So currently, all members of the IFT are trading by IFT index futures triad and are trading below their respective true week open, supporting the idea of high probability longs if coupled by an Kraken correlation. Okay, so Kraken correlation, we noted, I should say I noted the high time frame SMT at the lows supporting higher prices. This did deliver this did deliver 2R, therefore I would need to determine new models in order to support a new trade idea. So does it mean that we forget about that Kraken correlation? It just means that we need something further in support of that. Okay, so we know where we've got liquidity resting, SMT at the lows, SMT at the highs. Liquidity is going to be resting in those areas. Okay, so we can now drop down to the hourly to have a better look at what we think is transpiring. Okay, and put some further lipstick on the charts. Okay, so we can see where the market opened. Sorry, we just want to jump out to the H for a second. I just want to make sure. Yeah, okay, it's fine. So we've got here Okay, so we've got the Asian range low. That will have liquidity resting below. We also have an hourly BPR here, which we can see was respected. So if we take that, I think 8 o'clock's fine. Okay. So, and why not whilst we're here, let's that's down here, but we do have a large CB there, I mean BISI, and with this one here, I'm going to there, like so. Okay, and we want this liquidity pool. There. We obviously have all of these imbalances during the London session. Whereby all of them have traded into their respective BISI. So again, we're going to mark that up. I'm going to mark the top one because I really want to see from that perspective what happens. As I said before, they've all purged their previous day's high. So in my mind, I'm anticipating a more likely continuation of higher prices. My computer is not having a good time of it. Okay, so we have that. We don't have this high confirmed yet, so I'm not gonna mark that in just yet. We do have a lower CB here, which, for the sake of completeness, let's just put everything in. The idea would be we want to see support from the higher BISI, but if the market was to trade down to the lower one, then the reality would be okay. So that's what we have. I just want to just check because we've marked. We've got okay. So it's the high would be the next. The high would be the next, or even this imbalance here. Okay. Oh, is a small one in there, which we'll get to in a jiffy, and we've got the BPR up there. Okay, so let's just go back to the hourly. So now we can start formulating potential game plans if something is to transpire. Okay, so I would be surprised if the market traded all the way down to the previous day's low or the aligned lows. I'd be massively surprised, especially where YM currently is. So if we were going to look for a continuation, I'd want to see it at the Asian range low. So let me stop slouching and sit up. My computer is going super slow. So following the high time frame SMT at the lows, if the market trades down and purges the SSL AR, forming a low time frame cracking correlation, this could set trades down below the true day open. This could set the stage for higher prices. Okay, so that would be one. Let me check. So although at the BPR okay, so markets traded into the BPR, markets traded into the SIBI, taking out the previous day's highs. The question is whether that constitutes then okay, so two so with price being below the true week open, if the market is to continue lower in alignment with the high time frame IOF, then I would be anticipating it does so from the SIBI H4. Therefore, need to see an high time frame, PDA so I need to see high time frame cracking correlation at the imbalance to support the idea of lower prices. So we've got potentially two models. One of them could be in operation as we speak. Would need to see confluences to support that. I'm not sure whether we have yet. But the liquidity pool has been purged, so so the question would be, if we see the market confirm lower prices by closing below that H1 BISI, that could support this trade idea. Okay, so we want that on the order block. Would need to go and obviously check low time frame confluences and so on. Now, personally for me, I think that we're likely to see higher prices, but excuse me, not 100% certain yet. So that's essentially what I'd be looking at. Now, obviously, we've seen symmetrical price action here. We could see non-symmetrical. But it would need, ideally, would wanted to have seen that on the open key price level of the SIBI. I mean of the BISI. Okay, so I think we drop down to the 15-minute. We annotate our key time intervals. So we know we have one at 9:30 in equities open. And we also know we have one at 8:30 in the form of the advanced GDP. Okay. So going to forward time on using the M5 till about 8:30, and then we'll take a view. I'm not taking any pre-market trades, so even if this formed something, I'm not taking any pre-market trades. Okay. Oh. Bloody hell. Silly me. Alright, so what have we seen? All markets have traded down into, at the news, into the lower SIBI. So I'm just going to go out to the hourly. We can we can get rid of this one. Actually, no. I want to keep it for now because I want to see where the bodies of the candles are looking to close. Right now, we're seeing that apart from NQ, they're all sort of respecting that. Now, we could see if we got hourly displacement, and I haven't noted that, but let me note that as a possible 3. Okay, so if the market displaces away from the CBH4, by which we either missed GP2 or the market formed symmetrical PA and confirmed a bearish breaker, the H1 imbalance which is formed traded back to form low time frame cracking correlation, setting the stage for lower prices. Okay, so if we get a rejection from here and then we see an hourly displacement and the market trades back into that hourly displacement, that can set the stage for lower prices for us to engage in that, and it confirms this Kraken correlation. But as it was occurring pre-market, I just want to jump back out to the hourly because that's now we can utilize. Okay, so we'll just put that as a H1 for now. We want to carry that across. Okay. There's no aligned here, so I mean there is low time frame SMT, but I'm not too interested in that. Okay, so let's continue. Okay, so price is still balanced. Less so obviously on YM, but the market is trading down towards the the low. Now again, like I said, I didn't want a pre-market trade. I mean, you'd have been getting in sort of here, you know, which it's not part of the model. So So we're at equities open has just happened. I'm going to drop this down to the 1 minute just to slow price down a little bit. Okay, so let's see what. Oh, hang on. Let's just drop back onto the M15 time frame as well. So certainly want to see one of these members. Okay. So now we've seen a purge of the AR low. And I'll be honest, it does look bearish to me right now. It doesn't look like. So let's see what we get. Dropping down to the M5. Yeah, okay. There is absolutely zero. This occurring early is just unfortunate. Right, so where are we? Certainly it's looking rather bearish. It's not looking as though we haven't had, obviously, this is the 10-hour candle. We'll need to wait for the 10 o'clock candle to close. It doesn't really look as though the market's going to present us something unless we trade down to the aligned low, but that is quite some way away, so not looking ideal, I must admit. Okay, so I'm just going to drop down to the M5. Nothing yet. I'm just going to mark up that civvy. And I'm just going to take that. Mark that there. So that's a key inflection point for us to see if I'm going to get higher prices. Potential order block in there, but again on the M5 we're not seeing any sort of displacement or anything, so there's nothing yet to concern ourselves with. There you go. So moment we had a little bit of displacement potential, markets come down and close that in. So this suggests to me okay, so prices at the BPR, see the level of rejection at the BPR, potential model. Let's just mark this up. Potential. Ideally would have preferred to have seen this between ES and NQ, but you can't have it all your own way. Yeah, no displacement or anything to and and the lows have all been further purged across all three members. So that would suggest to me that YM and everybody else wants to go lower. No imbalance yet. Maybe one on. Oh, press the wrong button. Sorry. So now that they've all purged the Asia range low, so that invalidates that model as well. So the market certainly wants to reprice lower. We obviously looking at sorry, was there anything? Potentially the H1 order block, which we had marked up here. Sorry, let's just have a look at. I think we got so fixated on our longs. Don't think we'd have got a tag. Don't think we'd have got a tag on the H1 order block. Let's just see what time that would have been. So the H1 order block was confirmed on which candle? So it hadn't closed below, so it was this candle here, 8 to 9. So it's here where equities open. Okay, so we wouldn't have got the tag in there. So, okay, so it's not a mistrade, but it is definitely something to note. We knew we were looking at potential framework from here because we had the Kraken correlation. Therefore, if the market was looking to reprice lower and supporting the idea of lower prices, I mean, we had the bearish order block here. We had the H1 order block, which we had noted. So any retest of that level would have supported lower prices because ultimately we wanted to see if price wanted to trade down to here. But either which way, the market is repricing lower. So let's continue that. Okay. Sorry. So the question will be whether it forms. So I wouldn't be looking for longs here. I'd be looking for now the next H4 inflection point, which is the previous day's low. That's what I'd be looking to frame something off now, especially if we're going to go higher. But I would look at this and think we're likely going to purge the lows completely, but we'll see. So we're outside of our trade execution window now. On M15 market. We're pricing higher, but again, there's no framework for me to engage in, so this could continue as high as it wants, but it's currently trading up into that SIBI. NQ certainly looks like it wants to go higher. Let's just go and have a look at the... Oh god, my computer is having a meh. Okay, finally, it's paused price. So looking at the high time frame here, like I said, you know, I'm looking at this symmetrical price action. H4 was confirmed. H4 order block was even confirmed, if you will, from here. So again, adding a further confluence of lower prices. Could we get a cheeky hyperosio block H4? Which is now formed. Could we get a cheeky market entry? I'd be willing to let's just see where we are from a... I'd be willing to put a half risk entry on here. Let's have a look. I mean, it's half risk. I mean, when did it... it is outside of the trade execution window. That it definitely is. But I'm not anticipating the market to move higher. And the framework is supporting lower prices. I'm not gonna, no. Let's stick to what we set out. I'm going to... just going to put this, mark this up here. Like so. Down to there. Let's have a look at what transpires, but that potentially could be a trade idea, potentially. We're gonna obviously go on to at least the lunch period. Let's see if he even gets to break even. If it takes out that low, then that would go to break even. It's outside the trade execution window, so that's why I haven't taken it. It doesn't look good right now, I can tell you that much. Ooh, that would have been horrible, wouldn't it? That would have been disastrous. So the market's certainly finding support at this balanced price range, but again, it hasn't presented anything as far as I'm concerned to support higher prices. Although I want to have a look at that. No, okay. Okay. Well, if this closes now below, sorry, above this SIBI, then we've got the truest indication now that the market is going to seek higher prices. And, you know, we're potentially seeing a double purge. If you look at this candle here, we've taken out the low, and now we've taken out the high. So this would likely support the next 4-hour candle being bullish. So certainly something to look at. So yeah, let's just play on then. So you what time is it? So we wouldn't see the next 4-hour candle yet, but now it's certainly looking as though the market is going to take out the daily high, which is a shame because this is why we were looking for something underneath that Asia range low. Wanted to see if we'd get anything. Now we could have turned around and said, okay, well, just because we've got the Asia range low here, we also have this low, which would have equally as much liquidity. So maybe in actual fact, I've got in front of my own, because if you look at this aligned low, and it is aligned, right? So, did I actually? Okay, I'll get rid of that. They actually. Oh, sorry. What mind what I'm doing here. So you got the Asia. So let's just put this in here. Yeah, I did. Why would I do that for? Okay. So I think that again, it's in where I always say it's important to annotate the charts accurately and don't take the lazy approach. I think I've been lazy here because ultimately this is still aligned. This imbalance here is still formed inside of the range, so it's important because liquidity will have rested below this one as well. So you know, just because the Asia range is what we will classify as time-based liquidity pool, well, technically speaking, if you look at this here, this is the New York PM session low. So that is time-based as well from the previous day. So if we did that, copy that across. So where's the aligned? It's there. Okay, so we can take that there. So I think, folks, this one could well be on your boy. I'll put this back in here. Okay, and then I want to take these two, put them into here. And so you've now got the Asian range low there, which we know we purged. And then you've got this aligned low here, which is the New York session. Look at that. Purge. So so we'd have that going on here. So rather annoying because I tend to only look at the Asia range, go back like the Asia range like the previous cycle, but the reality is that it's still important. You should really go back 3. So from where we are, 1, 2, 3 would take you to here, and then you've obviously got the previous day's low. But inside of that previous day's low or the aligned low, any key time-based liquidity pool is important, and so that's on your boy. So now if we look at that and we look at the primary model that we were looking for, well, this now formed inside. So what would we be looking for now? We'd have the order block formed here, but would need to see displacement. We now see displacement here. Market potentially closing above this inversion. So you've got the order block, you've got displacement, you've got the inversion. So at this point here, excuse me, I mean, you could look at either ES or NQ, but okay, let's just mark it up whilst we're here, just to, you know, end this thing off. So all of this could be seen as the order block, right? So before we mark that off, what we need to do is get YM. We'll look at this low, right? So this candle here was responsible for purging the liquidity, fine. But all of this is the 15-minute order block. And inside of that, we have that confluence as well, right? So we have that. This same thing we have on NQ, and price also invalidated the BPR there, right? So that was an indication of potential high prices. And then we have the same thing here on ES. So now we have the inversion. Here we've got the order block. Which is actually an M15 order block. So if you go out to the M15, it's technically here. There's the M15 order block, right? So we could just use the M15 order block here. You don't have to use the M5, but for the purpose of this, we're going to use the M15 because that's what it is. And then obviously you've got on YM, which is important because that's the divergence pair. So at this candle here is where that order block is confirmed. So once that order block was confirmed, you could put your stop loss there if you wanted to. No reason why the market target the high. That's on your boy. I've got to update some notes because that's on me. That is a solid trade. It met our trade criteria. It met what we were looking for. And yeah, unfortunately wasn't able to wasn't as focused in order to sort of nail something like that, and that's a real shame. Even traded into the M5 inversion, but the reality was it did present the opportunity there, and that's an annoying one. So I'm going to update my notes with this one because that is on me. These are the types of things that I need to make sure I'm focused and nailing. Market presented the opportunity and I wasn't there to capitalize and take it. Let me update that now. Let's do that now whilst we are here. Don't think it's in here. Is it here? Ah, there we go. Okay, so I'm going to put a date on this. So we're going to put this as PA observation. And let's put the date of what we are, 29th. Okay, so important to annotate all time-based liquidity pools within the scope of the previous day or certainly between the previous day's low / high and current price and range high as this can be the framework for a trade idea, i.e. I.E. I did not annotate the previous day SSL NYPM as a potential liquidity pool for the model, seeking higher prices, where this ultimately formed and delivered with entry at the high probability OB M15. There we go. So I'm going to leave this one here. I've updated some notes. I think that's super important. I'm going to be taking that immediately into my live trading because that is really bad on my part. I'm going to leave this one here. We've been going on for about almost an hour and 15. I'm pretty confident that you would have taken something away from this one, because this was really interesting, really good. This was great for me. So hopefully you've taken something away. The importance of making sure that you annotate time-based liquidity pools that are in scope of your trading models. I didn't on this occasion. I had the framework correct. We had the model correct because we were looking for game plan 1, which was at the Asian range lows. But the Asian range lows was an aligned low. Great. Liquidity would be resting below there. Great. But the New York PM session low was also a time-based liquidity pool with resting liquidity. Didn't annotate that, and that's ultimately what got purged, and that's where the trade went from. So with that being said, hopefully you've taken something away. Hopefully you've enjoyed this episode. I know I have, even though it has been a slow burner. And yeah, hopefully I will see you very soon in the next one. Again, if you wouldn't mind liking the video, if you took something away from it, and if you're enjoying the content, why not subscribe to the channel? Really appreciate it. So guys, gonna leave it here. I'm gonna catch you in the next one.